the future of crypto is that all monetary assets become digitized. Once you do that, there might be a lot of implications that fall out of it. But I think for things that behave like money, there's just no better solution long-term than a public blockchain.
Hey everyone, Tanner here with WAGMI Ventures. On today's episode, we have Brett Gibson, managing partner at Initialized Capital. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders, founders, and investors from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Brett at Initialized. All right. Hey, everybody. This is the WAGMI Ventures podcast. I'm here today with Brett Gibson, managing partner at Initialized Capital. Brett, what's up? How are you doing today?
I'm doing great. And thanks a lot for having me, Tanner. It's great to be here.
Yeah, thank you so much for coming on the show. I know we have a ton of great stuff to talk about, so I'm pumped to learn more about Initialized and really dive into what's happening over there. So if we can start maybe just backtracking a tiny bit, I think just by way of intro, you've been building startups and investing for quite a while now, but I think I'm always really curious, how did crypto and Web3 sort of intersect your life? Maybe you could just kind of walk us through sort of your professional background, but also like primarily through the lens of your crypto interests, how that's evolved over time.
Yeah, definitely. So I started my career writing software in various contexts, mostly small startups, and then went from that to immediately deciding I didn't really want to have a boss. So I started founding companies and either running the engineering team or doing a lot of the coding myself. One of the startups was fairly successful as a blog platform I founded with Gary Tan. And then he and I both went on to work at Y Combinator. And in the interim years, Twitter bought Posterous and was shutting it down. And so we started a new service called Posthaven that was less of a startup and more of a side project. And we promised our users that we would keep the service online indefinitely, not sell out. It wouldn't be a redux of their experience with Posterous going to Twitter. And I had invested a little bit in crypto, mainly through the YC ecosystem. I tried out Coinbase just because it was a YC company at the time, which I wish I had had more conviction than just like, hey, let's throw a few dollars into this. But then, we both left Y Combinator in the summer of 2016. Gary was like, hey, Ethereum's coming out. Like, why don't you look into what we could do with Posthaven on Ethereum? Is there a way we can put more teeth to this promise to keep this online? And so I did a pretty deep dive on, the tooling and the infrastructure and what was going on in the ecosystem at the time. I came back to him, as someone, who was more practically minded with an emphatic no. These systems were not ready to be hosting a blog platform or transitioning over with the level of user experience we want. But that research, positioned me well when I joined the firm, when I joined Initialized the next year, to be spending a lot of time in crypto. So we're a generalist fund, do seed stage investing, and inclusive of that is a pretty long and hefty belief in crypto. A lot of our historic returns are from our investment in Coinbase. And so, I joined in 2017, was willing to read a lot of ICO white papers and just ended up owning a lot of crypto investing for the firm since. So, I guess that's more or less my journey and has evolved, from there over, six odd years of active investment in the space.
Love it. Okay, awesome. So I've got a bit of a kind of long question here to tee up this next question. But as I was doing a little bit of research, Initialized shares some of its approach on its website, sort of in the form of questions. And they're categorized by like product and market and team. And one of the great product questions I loved, maybe just because it's so simple, was like, what is this product solving? And it's something that, especially here in the crypto space, right? Like I've heard even on this podcast over the last year and a half, it's a recurring theme to like, Paul Graham's advice to make something people want has been reiterated a lot, but also to kind of make sure that, whatever you're building needs to use blockchains to accomplish that. Otherwise, the space is just really hard for, superfluous projects. So I'm curious from your vantage point, is crypto getting better at satisfying that question of usefulness or solving a felt need for an end user?
I think, it's a very interesting question. And I think that I kind of have two answers. Because, I think the premise of the question is often rooted in the idea that many of the consumer-facing use cases that people have dreamed up aren't working or aren't living up to their potential. And so a lot of the utility and product market fit of crypto is hiding in plain sight. there's unending appetite for degen trading activity. Bitcoin as a non-sovereign monetary store of value is still on a path to actually capturing that use case. And also we're also seeing, ability to trade and interact and do financial things in a decentralized way does seem to be something people empirically want, given the usage we've seen so far. But at the same time, I think that a lot of people in the industry, including myself, believe that, the full scope and potential of decentralized networks wouldn't be reached if we didn't go further. And I think there's meaningful debate about what further means and how far we go and what actually needs to be on a public blockchain, because distributed consensus is expensive and not everything needs to incur that expense. But, we are seeing a lot of things starting to come to pass. I think that certainly gaming is adjacent to, in some ways, the gaming economies are adjacent to some of the value activity we're seeing in the trading world. And I think that's why people are heavily looking there for the next use case that breaks through. We're investors in Horizon Blockchain Games and really have seen them, they both build Skyweaver and then build Sequence, the platform. And, the conversations, the types of people they're talking to about Sequence these days, it feels a lot like there was this narrative before the institutions are coming from a trading perspective that didn't really materialize to the last cycle. And it does feel like the gamers and the game publishers are coming. It is finally ready to come true this cycle. And then I think that, there's actually also product market fit from stable coins. People want stable value that is non-sovereign and that they can trade, and especially people in jurisdictions where their local currency isn't that functional. So my answer is kind of like yes and no. I think that the jury's still out on a lot of these fully crypto utopian consumer applications that introduce financial incentives into sort of every part of our interactions with the companies we interact with. But that doesn't mean that there aren't plenty of more mundane use cases that are full speed ahead on fulfilling the thing people want.
Super interesting. Moniker. Yeah, that makes a ton of sense. Okay. So, maybe with some of that foundation, I'd love to dive in a little bit more on how Initialized thinks about sort of deploying capital into the crypto space. Since you guys invest across sectors early stage, would you say Initialized has a defined thesis for crypto, or is it more opportunistic? And, maybe just how do you guys think about what areas of crypto are kind of interesting to explore right now?
Yeah, I'd say we bring the same generalist lens to crypto that we bring to, investing generally. So we'll invest in any sector we feel like we can get our heads around, and in the same way we'll invest in any part of the crypto ecosystem we feel like we can get our heads around. And I would say that I'm pretty enthusiastic about most major themes, from things on the institutional trading side to DeFi to gaming to NFTs and art and culture. I think there's a lot of interesting things going on and a lot of very talented people building. What distinguishes us, but I wouldn't quite call it opportunistic, because what distinguishes us is less what we invest in crypto and how. As a generalist firm, we have a fairly extensive support apparatus for companies. So we spend a lot of time with our portfolio. And so, our model is very much fewer, more concentrated bets. And that can kind of be in a mismatch with some parts of the crypto ecosystem, and especially in token rounds where too much concentration is not ideal for the token at launch. So we will invest in instruments that convert to tokens. We're agnostic as the difference between tokens and equities, but we are still looking for places where we are, leading something that's seed stage in round and writing a relatively large check, that's most of the round, and, with working with founders who want to work very closely with us and help us support them, through all the facets of their business, from seed to Series A.
Got it. Super helpful. Okay. Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Now, let's get back to the show. So, just looking into Initialized, you guys have these crazy statistics where it's like, across the firm, it's like at least 27 unicorns, 3.2 billion under management, 175 plus active portfolio companies. So, I think I was curious to pair a recurring question on this podcast, which is always just curiosity about sort of early challenges in the life of typically a project. But I'd love to pair that with your journey at Initialized. So, maybe you could talk about one or two sort of early challenges in your tenure at Initialized and how you and your team thought about solving for those challenges.
Yeah, it's a really interesting question. I think that when I joined, the firm has been largely in a growth phase or was in a growth phase from the moment when I joined. And so, there was this question of, when, Initialized started, it started mostly as a angel vehicle for people to write follow-on checks to Y Combinator companies they were working with. And then in 2016, when we became a standalone fund, we did the next natural step, which was, invest after demo day to mostly YC companies. But we had from there to figure out like who are we going to be and how we're going to do where do we fit into the broader venture market. And that evolution, it's interesting because, venture is very naturally an opportunistic business. And so, you're balancing the opportunity that comes in the door based on your relationships with the value and leverage you get out of focus. And so, the arc of the firm has really been one of, how do we figure out where we play best and what we do best? And so we kind of wrote some larger checks, we wrote smaller checks. We've tried different iterations of, how heavily reserved the fund is, how we deploy those reserves. And, it's really kind of oscillated back and forth, and so I forget the term for when something sort of oscillates down to a single line, but like over time, we've gone back and forth in different directions, and just like in the last couple of years, really come to a focus point on what we do now and what we feel we're best at, which is seed stage investment, supporting of seed stage companies. Like at the larger end of what makes sense from a fund model perspective for a seed stage venture firm, so that we can provide a lot of services and are heavily reserved and a much more intentioned approach to deployment of those reserves.
Love it. Okay, got it. So I'm curious for you personally, like what gets you most excited about crypto from your vantage point at Initialized these days? Or, maybe even different but related, like what types of projects or applications do you think maybe have the highest potential for sort of venture scale growth and adoption?
Yeah, absolutely. I mean, I think that trading's never going away. Both, fiat on and on ramps, trading infrastructure is always going to be a core part of the crypto ecosystem. I'm paying a lot more closer attention to stable coins, and especially in emerging markets. The stable coins as a thesis, I think, becoming pretty consensus as given their growth. And it seems like they found a bottom this year in terms of total value. And there's always been a general idea that they were going to show up in emerging markets in a meaningful way. And I think that's really starting to come true. I continue to be interested in what's going on with NFTs. I think we're still scratching the surface in both on the art side and on the utility side and moving beyond that. I think there's still a lot of ways to go in DeFi. I think that, protocols kind of rolling up and merging into more like platforms and, actual meaningful DeFi platforms that replace incumbent trading venues is pretty interesting. And then personally, I think, in the time between when I was at Y Combinator and when I was at Initialized, I was not only doing research on crypto assets, but also on cryptography generally. And so the advances in privacy tech are a little bit like intellectual catnip to me. And I think that they will actually pay meaningful dividends. So what's going on with ZK, what's going on with fully homomorphic encryption, I think those are really big opportunities, especially if you think back to, how cash is not it's a downgrade to go from cash to public blockchains for day-to-day transacting.
Love it. Super interesting. Okay. So, one thing I thought was really interesting is that you're actually the host of a podcast at Initialized called HiBit about the art of technical problem solving. And I know for me, like I'm always astounded at some of the conversations I get to have on this podcast. So I was curious for you, are there maybe one or two things you learned from those initial conversations on your show that may have illuminated something new or framed something in a new way for you.
Yeah, yeah. Thanks a lot for mentioning that. I think what's really my goal really in HiBit is when I'm talking to founders both before and after invest, we have to do a lot of work about general advising and evaluation of startups, but my personal interests are often on the technical side. I find it hard to evaluate a company if I don't really understand how the product is, how the product works and what it is. And so being able to have the opportunity to deep dive with some of the more technical people, and we fund some pretty amazingly talented technical people, has been really cool. I think that my takeaway from the show is, I talk a lot with my guests about, we talk about a specific problem they solved in their engineering, and we talk, but we also talk about like kind of what we learned about the process there. And what I find fascinating is the number of commonalities across problems. There's a lot of one thing is there's a lot of cases in engineering where you're kind of stuck in tunnel vision and you need some outside context and reframing of problems to jar you loose. And then, an addendum and aside to that is I think there's a very common problem both in engineering and startups generally where you get, when things aren't going well for whatever reason, you suddenly close yourself off to the scope of the possible. And so, what you see among really amazing engineers and really amazing founders is they have this mental resourcefulness where they're always able to keep optimism that there is in fact a solution to whatever problem's at hand, and then give themselves space to step back and understand where they've been putting up their own blocks in terms of what they might do or how they might execute it, so they can see around what's going on in their head to like what a great and elegant solution might look like.
I love that. That's fascinating. Okay. So if we can maybe transition here, I'd love to maybe use the time we have left to talk a little bit more about the crypto space more broadly, which we've sort of touched on in some ways, but want to maybe dive a little further into where, one first thought might be crypto's obviously seeing a bit of a resurgence lately, with some commentators wondering if this is kind of could this be the legitimate end of the bear market we've seen for quite a while now? So I'm curious for you, like, how do you interpret this moment from your vantage points and what this moment means?
Yeah, it's a great question. I'm not, it's not generally my business to be the best prognosticator about what's going to happen in the markets and public action. I think that it's interesting in crypto because it is very relevant to talking to startups, because even if you can't predict what's going to happen from a runway perspective, crypto startups need to be aware of the cycles and when to hole up and go into cockroach mode, and when to play into the excitement around them and how those two interplay. I'm pretty optimistic about what's happening. I think it's very meaningful, and we should all be very cautious that we don't really know how crypto is going to behave in this new rate regime. And there's good reason to think it might break from the past. But with that in mind, I think my posture is basically, assume the cycle is going to go like cycles I'm used to until I see evidence otherwise. And so far, it does seem to be very much lining up like the past. It reminds me both, the energy earlier this year and some of the price action this now remind me of late 2019 and going in 2020. And so, my base case is that, we're back in that standard cycle. But I do think, we all need to be a little bit more cautious this time around with what's going on in the world widely, both interest rates and, it seems like, geopolitics is somehow courting as many black swan events as possible these days. So
right.
That one's hard to account for.
Definitely. Okay. Super interesting. So Galaxy, they published some research about a month ago that showed venture funds raised a little over $1 billion in Q3 of 2023. And I think that according to them, marked the first increase since declines started in the third quarter last year. And so my question is, again, from your vantage point at Initialized, being kind of a larger fund, how do you interpret this news? And, maybe too, like, what does it mean for what institutions think is happening and where things are going?
Yeah, that one is even more of kind of a deep, like, crystal ball. I think that So I think that there's a couple things. One is that, venture funds, unlike startups, or rather to a degree greater than startups, have more levers to extend their capital because you just don't deploy it and it lasts longer. And I think a lot of the venture ecosystem saw what was happening late last year and decided they needed their funds to last longer. It's very clear from the LP communities that deploying a fund that was meant to be a 3-year initial window in 1 year was not acceptable. And so I think the first answer to that is simply a lot of fundraisers got pushed out. And I think that trend continues into next year where there's going to be a lot of venture funds in market. The second question is the second part of your question is kind of about like fund size and amount of capital. And I do think there's actually a secular trend there the other way, right? I think that there's a cyclic trend where you get more capital when things cost more when you're in a bubble, but there's also the secular trend that's been happening over the arc of my career where it increasingly costs less and less to run a software company. And I think the generative AI only exacerbates that. And I think that we're also seeing it happen in other domains. So just in the same way that, I went from having to go down to a colo and rack a server and the cost and energy required with that for the cloud revolution. And that meant that startups need a lot less money. I think that something similar happening with writing software today and using generative AI to do it, or even say sending satellites into space. And now there's SpaceX, which is, providing economies of scale for those businesses. So I think that over time, it does make sense for venture funds to become smaller because the entrepreneurs are able to get a lot lower leverage out of the capital they raise.
Got it. Okay. Fascinating perspective. So, one recurring question on this podcast is if I say the future of crypto is blank, this is definitely a crystal ball question. How would you fill in the blank?
I guess there's a lot of things I think could happen. I think that I'm inclined to answer with the thing I'm most confident about, which is the future of crypto is that all monetary assets become digitized. And, there might be a lot of things, like once you do that, there might be a lot of implications that fall out of it. But I think for things that behave like money, there's just no better solution long-term than a public blockchain.
Love it. Okay. So, Brett, maybe 2 last questions here for you. One question would be, here in 2023, I'm curious from your side of the table, like what advice would you have for crypto founders that are, maybe new to the space and maybe not used to some of the cycles that I think maybe some veterans might be a little bit more accustomed to? What would your advice be for new crypto founders as an investor in the crypto space?
Yeah, that's a great question. I think that you always need, it's just standard. You cannot get caught up in bull cycles and assume that everything is always going to be like that. You need to manage your runway very well, and you need to be able to outlast bear cycles. And if you do, it can be greatly to your advantage. When I think about the crypto investments we made in the 2017, 2018 era, it's almost across the board that the KPI was whether or not they died. And the ones that, lived to tell the tale were extremely well positioned for the next run up and, almost across the board. So don't get caught up in the hype. It gets a little crazy and it distracts you from actually building value for users. And then, just make sure you have the runway to survive through the next downturn.
Great advice. Okay, awesome. So Brett, maybe one last question here for you, or kind of 2 questions in one, but what is your team working on right now? And what's the best way for people to follow along in the journey?
Yeah, we're just, continuing to do what we do. We're still, it's been, even though some of the broader venture market has slowed down, we're still deploying, seed investment's still happening. It's a great time to start a company. So we're still meeting great founders and making investments and then working with them to build their business. So, you can follow, I think on Twitter, I think it's at Initialized and I'm at Brett DG.
Perfect. Brett, thank you so much for the time. Fascinating insights here and super grateful. Got to kind of go on this journey with you. So hope the rest of your week's a good one and take care.
Thank you. Yeah, it was great. It was great chatting to you. Great questions. Thanks a lot.
Awesome. See you, Brett. Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and maybe give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations with the most interesting crypto founders, investors, and builders from across the world. Thanks so much. Have a good one.